now, just so everybody knows. Perfect. So thank you very much for everybody for logging in today and for those who are watching after the fact. My name is Colleen Clark, and I'm the CEO of the Greater Langley Chamber of Commerce. And it's my pleasure today to introduce to you somebody who I actually very, very much respect in our industry. In line when somebody comes on, certain people come on the TV and tell you this is what's going to happen. When our presenter speaks, I tend to listen. So I've had the pleasure of working with Helmut Pastrick over the years through my previous role on the Sunshine Coast and working with our community credit union. Helmut Pastrick is the chief economist for Central One, which is the central financial facility and trade association for BC and Ontario credit unions. Helmut leads a department responsible for providing economic analysis and forecast to credit unions and Central One. And you, as I mentioned, are frequently called upon by the media to provide comments on economic news. And your presentations are in demand by many organizations and groups, including credit unions, trade and professional associations. And we really appreciate you taking the time from your basement to come out and join us today. And I also would like to acknowledge that we are meeting on the traditional territories of the Coast Salish people here in Langley and in the Fraser Valley. So Helmut, I'm going to turn it over to you to kind of give your overview, and then we'll handle some questions at the end.
Great. Thank you, Colleen. And thank you for inviting me to make this presentation. I should say right off the top that I really don't know how this economy will shape out as a result of this virus. It's unprecedented. These are most unusual times. We have not seen a recession play out like this, certainly in the modern era. And therefore, we have a little history to go on, and there's a lot of sort of guesswork involved, probably more than usual. And so with that caveat, I should say that, I do expect the economy to begin to improve, but so much is dependent on the course and path of this virus, containment measures, to what extent they're eased, will we have a second wave, and so forth. So my material will cover the situation as to where we are, and then I'll present some scenarios based on some epidemiological projections. I think one, rather than being an economist, one needs to be an epidemiologist. Might be a better suited for this particular purpose. But let me go ahead, and I'll begin with my slide presentation. And I'll begin with the global economy. This is a measure of activity in almost real time. The latest data point is April. And this encompasses the majority of the global economy and the majority of the major countries. And here you can see the very sharp drop that has played out in this particular index. It's like the economy hit a wall or fell off a cliff. Any of those metaphors certainly apply. And what this graph tells us also is that the services sector is harder hit than the manufacturing or goods sector. And that is somewhat unusual, where we see in other recessions the commodity sector going down first, and occasionally housing is a part of that downturn as well, and the services kind of follow. So this is completely the opposite of what we normally see, and this is a very sharp contraction that we're going through, and certainly based on the chart that you're looking at, the worst on that data history, and probably the worst since the Depression, if we had information going back that far in this series. And it's really widespread. It's across most countries. I'm not aware of any country that has escaped the negative effects of the pandemic. Just turning to Canada, the labor market's probably our best indicator of the situation as it's currently stands. Here we see the labor market for Canada change in the last 3 months, beginning with February. The February numbers were quite good, and then of course we hit the wall in March, and then particularly in April. And what you're seeing here on the left-hand side is the percentage change in employment. It's around 15% decline. It works out to about 3 million persons. The unemployment rate was measured around, let's say, 14%. And that doesn't capture the true state of of unemployment. If we were to count people who had left the labor force and discouraged workers, if you will, it's probably closer to 18%. In the US, it's above 20% if you count in those who are looking for work and those who are unable to find work or dropped out of the labor force, etc. And on the right-hand side, the situation is even more dire. This is the hours worked, the change in the hours worked, and it's almost a 30% decline. And so it hit, of course, part-time workers very hard and full-time workers as well. So the impact on the economy is really better measured by the large drop in hours worked. And across industries, again, this is at the Canada level, no industry was spared. The graph on the left-hand side shows you the change over those past 2 months, April and March, in person terms. And we're looking at the largest declines in the retail, wholesale trade sector, accommodation, food, and so forth. The services sector primarily, travel, transportation is also significant. And these are just in level terms, absolute terms. So no industry escaped the pandemic's negative effect. On the other side of the graph is percent change. And there you can see that the accommodation food sector had roughly almost a 50% drop in employment over the past 2 months. That's very, very large. And other industries on a percentage basis, of course, the travel industry and so forth. So it's just really being widespread, broadly based decline that we're seeing. Again, not common to other recessions. Another way to look at it is the change in employment by wages. And here we can see that again, in terms of levels, about 1.5 million, 1.6 million people lost their jobs who were making between $12 and $20 an hour. And on a percentage basis, the graph below shows you that those making roughly minimum wage or less had a proportionately larger decline, somewhere in the order of 35% of those individuals lost their jobs. So it was really concentrated in lower paying, service-oriented work, as you could tell by the accommodation services and transportation and other related sectors as well, retail, of course. Small businesses also bore the brunt of the downturn. Again, this is over the past 2 months. So in terms of levels, the number of employees who lost jobs in businesses with less than 20 were the largest hit. Again, that speaks to the industry composition of the decline, and the same would apply to the percentage change. So small businesses were certainly most impacted here in this particular recession. Just turning to some more sort of esoteric economic numbers, real GDP growth here. We don't have numbers for the first quarter or the second quarter of 2020. The decline, these are my estimates for the first quarter. Of course, the hit really came in March, in roughly mid-March. So the decline in annual rate terms, not in actual terms, is my estimate is 7.5% decline. The consensus is around 10% or so. But the actual decline would be less than 2% in my case. So these are annualized numbers. That's how typically they're reported. But the second quarter is going to be a doozy. That's a technical term, by the way. So I have it at a minus 40% annual contraction. So that's roughly a 10% drop on a quarter-to-quarter basis, non-annualized. I've seen some estimates as high as 50% to even 60% declines at an annual rate for the second quarter. Again, this is unprecedented. I've never seen any numbers like that and over such a short period of time. Just quickly turning to the housing market, these are for the Fraser Valley Real Estate Board area. And the monthly MLS numbers through to April. And you can see the large decline in sales that played out also in March, but mainly in April. And the same would apply to the flow of new listings coming onto the market has also declined. And the number of active listings that's left over at the end of the month after sales have been occurred and new listings have come in is also down. So on the supply side, yes, sales are down, but also the supply is coming down as well. However, the market balance as measured by the sales to active listings ratio just dropped very sharply. And therefore there's certainly an imbalance in the marketplace, not enough sales relative to supply, which only means that prices will be declining. This is the MLS Home Price Index graph, and here so far prices have held up through to April. However, as you can tell by my heading, it's for now, and almost certainly the May number, June, July, potentially into August, September, I fully expect prices to be down, given the large imbalance in the marketplace. We need to see sales pick up ultimately, and that's what will drive the market higher. So now let me turn to the virus. So I found this particular graph quite insightful, and it shows the number of total confirmed cases and the trajectory. You can see the United States still climbing over 1 million. Canada there, we're around 100,000. And of course, of note there is China, South Korea, even Australia, New Zealand. Now they've flattened out. So that's potentially very good news. It really depends, of course, on the flow of new cases. And here we have another graph that's showing the flow of new cases. Now this is a moving average, a 7-day moving average. It looks like the curve is somewhat bending in the US, in many countries, and of course Canada is buried in there as well. But I think of note here is what's happened in the latest time period in South Korea and China. Notice the upturn. And of course, those economies have opened up to some extent. And there are these reports of other outbreaks playing out. So, that is certainly concerning. And now with the US and other countries, and of course, Canada and BC, we're going to begin to open up in various stages and in various ways. And we'll have to wait and see as to how this plays out. Will we see further climb in new cases? The curve will begin to go the other direction? Hopefully not, but certainly that's a risk, and substantial risk, certainly. This is the projections I came across from the University of Minnesota Center for Infectious Disease Research and Policy, and I thought it was quite summarized the situation quite well. I come up with 3 possible scenarios. So scenario 1 is basically where we are now. We have the first wave and has played out, and that particular scenario sees a series of smaller waves playing out through the rest of the year and into 21, although again, you can see the peaks are relatively smaller. So it's a kind of a variable up and down performance, and I'll show you my estimate for the impact that may have on the economy in the subsequent slides. Scenario 2, here we have the second wave coming in the fall and winter, and it's even larger than the first wave. Then we have a subsequent third wave playing out sometime in 21. And coincidentally, this is similar to how the Spanish flu played out about 100 years ago. There were 3 waves. And the second wave was the largest of the three. And it lasted roughly 17, 18, and 19. And the last phase or scenario is a slow burn, as they termed it. So we had the initial wave that's played out, and then it just continues to be present. Containment measures are relatively effective. And so we do have certainly some improvement, and hopefully we will have the third wave play out. So regardless, this virus is going to be with us until we have, of course, a vaccine, herd immunity, and if we have a therapeutic, that would certainly be a big positive as well. But these all take time to develop, and there are no doubt intense research occurring right now. And hopefully one or more of them will pay off. These are my guesses, I should call them, as to how the economy may play out under those three pandemic scenarios. So this is, I'm assuming that Q1 and Q2 of 2020 will be as my estimates. And so, but beyond that, I'm basically pulling out numbers to try to reflect those scenarios. So scenario one is where we have a series of waves. It really is quite present in our society and economy. And of course, the drop in GDP for 2020 is quite severe. It's around 6% or so. And for 21, only a modest pickup. I have it somewhere above 2%. So the hit to 2020 is around 8%. And that would be among one of the worst annual contractions we have seen. Scenario two is really the worst of the three. Not surprisingly, it's a W shape. So we do have a rebound, but then we have the fall, winter, second large wave and another contraction of considerable note. And then we kind of climb out of that. So based on these projections, 21 is also another year of a contraction. I have it somewhere around, what, 6% or so. So that would be certainly a scenario. We don't want to see this one play out at all. It would really result in very serious, economic damage to businesses and to individuals and households. And of course, the hit to government budgets would be even more severe than what we're seeing currently. Well, this would be the better outcome, the best of the three, where we have that slow burn. We have a rebound, and we actually have 21 playing out to be quite a substantial rebound. Bear in mind with these numbers, we're dealing with some arithmetic here. So when you're coming off a very low base, typically the percentage increases are very large. So hence we have that rebound that is either 10, 15, 20% coming off of Q2. And of course, for the year as a whole, it's a low base. So bear that in mind. But nonetheless, it is a substantial rebound. And in all three of these scenarios, we're still going to see the unemployment levels higher than what we saw before this pandemic played out. The economy at a lower level than before the pandemic hit. So there's going to be a lot of excess capacity in the labor market and in the economy as a whole, even at the end of 2021 on any scenario going forward. This is my base scenario. It's similar to scenario number three, although I'm assuming that the second half of 21 will be a much stronger performance than that scenario for number three. There'll be a lot of pent-up demand in the economy, consumer demand, housing demand, and of course demand on the businesses to some extent for investment and expansion purposes as well. No doubt there's going to be a lot of churn in the business sector, particularly in small businesses. Some will not survive, but there will be some over time that will come and take their place as demand improves. And of course, we need to see public confidence improve so that we can they can go out and spend and engage in a variety of activities. So that's still a considerable question mark, but we do need to see improvement. And if we have that vaccine play out sometime in 21, then I think this scenario has a fair chance of materializing. So I'll just summarize briefly that we're in a severe, ideally, hopefully short recession, but it's hitting all industries, probably all regions of the province as well, and provinces in the country. Now, there has been almost unprecedented fiscal support. And of course, on the monetary side, central banks have cut rates to near zero, have provided a lot of programs to keep markets functioning, providing liquidity support and the like. But in the end, it's this is all helping, of course, and it does mitigate some of the income losses, but not entirely. And again, some of the businesses, we certainly can take advantage of the various government programs, but it certainly won't fill the gap. And not surprisingly, it's a very large gap to fill, by the way. So in the end, as to the recovery, it really depends on the virus and the containment measures. Will we have a real treatment coming down the road, and when will that happen? So really my last bullet here is that there's just a lot of uncertainty around this particular pandemic shock event. And quite frankly, I really don't know with a high degree of certainty as to which scenario may well play out. So with that, I'll end, and I'll be happy to take some questions.
Thank you very much. I do have some pre-submitted questions that we'll go over, and I thank you for sort of pulling out your crystal ball and giving us sort of the worst case, best case scenario, depending on, again, it's not just up to you and I, it's up to the whole of our country and our communities as to how we move forward. I keep saying, my team keeps joking around, I keep saying we've got one chance to do this right the first time. And sort of, and if we can get on to sort of a phase 3 where it's a slow burn, like we said, and I think that's sort of been our messaging from the province and from, from everybody. I think the message for Bonnie Henry, especially Dr. Bonnie Henry all along, is if we can do it, keep it slow and low, it will be hurtful. So it's nice to hear that the same thing applies to the economy. When it comes to the virus, I mean, again, right now we've just, as you mentioned, everybody's sort of woken up and walked off a cliff, and things have shut down very quickly, and we're all working without a playbook. Yeah. So, one of the first questions is sort of, what does fall 2020 look like? So if we continued, let's take a look at it from, if we continue on the path we're on right now, from your perspective, what does the economic growth look like for the fall of this year?
Well, we should see some rebound play out in the third quarter, fourth quarter. How strong it might be, that's somewhat debatable, but to the extent that we see an opening up, more businesses, granted on a phased basis, limited capacity in some cases, as you all know, but we should see some pickup. So the numbers will reflect that. Again, I don't see it being a particularly huge surge, notwithstanding that there's a base effect at play. Nonetheless, even a 10% number sounds impressive, but it's probably part of that's just due to the low base. So I think under I think reasonable circumstances, we should expect some improvement in the economy in the second half of the year.
So one of the next questions is, what are your thoughts on what will happen in the real estate market in the Lower Mainland with the short run and the long run? You touched on that a bit in your presentation. I think short run right now it's taking a hit.
It is. So the short run, let's say the next 3 to 6 months, negative. Prices will be coming down 5%, potentially a bit more. Sales activity remaining very low. Housing construction dropping off. And reflecting the sales and the pricing environment. And that drop in new construction could, well, probably extend through the year. That's certainly possible. As to when sales may begin to pick up, it certainly depends on the confidence that the public has in engaging in, the house hunting, sales transactions. I know realtors, to some extent, are going virtual more so than before, and that's certainly can result in some sales. I'll ignore that. Sorry. So I think, long term, though, I'm positive. We will be through this, and the outlook is good long term. Let's assume that 2021 we do have some either a therapeutic or vaccine confidence begins to rebuild. And I think the economy and housing market will follow. Long term, I'm very positive on the housing market. I think in 5-10 years, we will continue to see substantial housing activity, both on sales and on prices. And we will see, certainly double-digit price increases playing out over the next 5-10 years. 20%, 30% increases wouldn't surprise me over that time frame.
Great. Okay, so one of the next questions is you've pretty much answered it in your presentation, but it was, what was the timeline for recovery given the current economic situation? And with the scenarios, I think you give us a really good look at, and I think it's not just all of Canada. I think it's going to really come down to each region, each province, even where we're going to see maybe a little bit more economic recovery, where Ontario might not, because things have, a little bit longer have lasted. So what do you think about, is sectoral or is it more provincial?
It is to some extent provincial. Just to consider our neighbors in Alberta, where not only the pandemic, but the oil price hit. So that's another, negative that will hold back that economy, including Newfoundland, to some extent Saskatchewan, and of course in BC we do have the northeastern, even part of the Kootenay region, to some extent the Okanagan, dependent somewhat on how Alberta economy performs. So there will be some spillover in that, but the recovery pattern, as you've heard of the economists talk about it. Will it be a V? Will it be a W? Will it be an L? Will it be a hockey stick or a Nike swoosh, if you will? A tough one, a tough call. It doesn't look like a V, notwithstanding the sharp rebound off the low base. In that sense, it kind of looks like a V, but it really depends on how the economy plays out after Q4, 5, and into 21. That'll really determine whether it's a V or not. And right now, I'd have to say not. I think it's going to be more, more of a Nike swoosh, I suppose. Some initial upturn coming off that really depressed second quarter number, and but again, if more of a gradual, depending on the pace of our opening on the economy and the like. So,
Great, thank you for that. How do you anticipate the economic downturn to impact charitable and nonprofit sectors? In that, a lot of what they do is event-based as well. So any crystal ball moments there?
I think it'll be a negative for them, unfortunately. As you said, they hold fundraising events, golf tournaments, for example, luncheons, conferences, and so forth. So clearly that won't be occurring anytime soon. So it will be a negative for their fundraising efforts. Hopefully they can offset some of that with some other measures, and perhaps some of the regular donors will step up and fill a bit of that gap. But no doubt they'll fall behind on their revenue targets for this year.
So you say for this year, do you see after of our, upon recovery, do you see that sort of being a bit more of, you know, people giving back a bit more now that they can, or feeling more trust in the system? After fact, do you think people become a little bit more philanthropic?
Hopefully. Certainly, it's an important, part of the nonprofit sectors is philanthropic activity for sure.
Yeah.
But again, this recession has hit incomes quite substantially, as you can tell by the labor market numbers that I showed you, and notwithstanding the income support from the federal and provincial governments, it certainly won't be enough to make up the gap. So to the extent that the economy is operating at lower income levels, then that probably will translate into lower levels of donations, if you will. So it's I think even 21 could be a challenging year for charities.
Okay. Just going through the questions, make sure I cover everybody's questions off. Are there any measures being considered by credit unions to support the acquisition by new owners of businesses that did not survive COVID?
Well, I'm not certain. I'm not really, in that end of the business, if you will. I know that credit unions are, like other lenders, are certainly experiencing the impacts of the economic recession, and I'm sure they're like working with their clients to mitigate some of these effects. Whether it's through mortgage payment deferrals or just recasting loans in some way. It's in lenders' interest to have healthy customers, if you will, financially healthy customers, and this is a temporary situation, although very severe for some businesses. And I fully expect that there will be some insolvencies playing out here, both businesses and consumer. So that'll result in some cases in more loan losses for credit unions and other lenders in general. I would expect loan arrears rates to rise during this recession. And that'll be, translate into more and higher loan losses over time. The shorter the recession is, the better. Sooner that we can see businesses, generate at least some income. That would be, certainly help. But in some cases, it's just simply a matter of lack of demand. And in other cases, it could be supply problems. This has also resulted in some supply shortages, whether it's through production facilities, and we are dependent on other countries for some of our inputs, and they're feeling recessionary impacts as well. So it's some business can be hit both on the demand side and others on the supply side.
Yeah, actually came in contact with a general manager of a major manufacturer here in Langley this morning, who said since this whole thing's happened this week, he had to lay off his entire labor force because he has no product to put together because of supply chain issues.
Yeah.
So, and our estimate through the chamber network was after 8 weeks is where you'll start to see supply chain issues really start to come into play, and we're at 8 weeks now. So we're finding so he's very optimistic that 1 week shut down like that they can get some processes back in place and get some things moving that they could bring everybody back the following week. But he has mentioned that it's going to depend on the shift of other countries, because right now he's dependent on shipments from Mexico for products that they need to build their products. So this is where we're going to start seeing some of that, and we of course have no control over what other countries are doing in place. So
and just to follow up, I expect that some of these impacts you just described from that manufacturer is playing out in other instances as well. And so I think the unemployment counts, even though they were very bad or severe in April, I think in May we will see even a higher unemployment rate measured by StatsCan. I don't expect another 2 million job loss in the month of May. Perhaps it'll be down to 250,000, let's say 500,000. But there's some of these delayed impacts, partly due to supply chain and the like, that are still playing out.
Well, I've gone over all the questions that were submitted, so I am just going to quickly open it up. If anybody would like to pose a question into the chat box, I'd be happy to facilitate that. So I do have one more here, but if anybody wants to start typing into the chat box, we can take a question from there. And the last question I had here was, you probably don't have, but you might have heard of something, but the question is there any grant or funding for businesses to renovate their locations so that they can serve clients with new guidelines for industry? I know that BDC and other programs do have some things in place for doing mass renovations, for retooling and things like that for manufacturers, but I have not come across anything yet for like a small business that needs to reformat a location.
Yes. I have. I did look on the federal government has a number of programs, as you're well aware, and BC government has a handful as well. But primarily the federal programs, and there are a number of them. Many of them involve loans. I didn't see too many grant programs on their list, but it's certainly worth looking into. There certainly would be, I think, some opportunity to tap in to some of those measures. Some loan measures are partly refunded or not repayable. So it's quite attractive. It's certainly worth looking into. And just, if you need to tide over your business or to reshape your business, it's worth, looking into these potential programs. There are any number of them. I don't have a handy list, but it's worth looking at the Government of Canada website. It's pretty easy to navigate and to look at the programs that are available for businesses.
And we also have a lot of that information on our chamber website underneath our COVID page, plus the Canadian Chambers, Canadian Business Resiliency Network has an entire page dedicated to programs and services. So if anybody is on the call that's looking for some of that information and you're not able to find it, please drop me a personal email at colleen@langleychamber.com and I'll make sure I connect you with the right programs and services.
Yeah.
I don't see any questions popping up in the chat box. I would love to thank you very, very much for taking the time. And maybe we'll task you with coming back in the fall and see where we've gone from here. If you don't mind, we'd love to have you return. Hopefully you get to be back in your office a little bit by then. You're not having to work from your basement. Yeah. And thank you to everybody for coming on the line today. Again, thank you very, very much for your insight. We really, really appreciate it.
Well, thank you for inviting me.
Great. Everybody have a great day. Thanks very much.